I don't think much about it because I don't think it's the biggest thing they do. I think the thing that they do for the economy, or the thing I want them to avoid, is high inflation, and I want them to avoid high deflation. And so I don't pay a lot of attention to those little wiggles.
Is that a concern at this point? I mean, most people have relaxed a little bit about any concerns where the Fed needs to step in. What do you think?
You mean about inflation?
Yeah.
No, I don't think it's a big concern.
Yeah.
Wow, you're old-fashioned. So price stability is something the Fed needs to look at. They got like 15 different things they look at now. That's what a concept that maybe they should just
Right, and there's a little theorem in economics. If you have one tool, you can have one goal. So if you have 15, they're unpredictable. That's not good.
And it's impossible to do, which we've sort of seen, I think.
But David, isn't it likely the Fed will have to shift, given the unemployment rate is 4.8%, from one side of its dual mandate employment to the other, which is inflation, because the U.S. economy is growing faster than its potential. The potential for the U.S. economy to grow is somewhere in the high ones. We've been growing in the low twos and probably stay in the low twos because of upcoming fiscal stimulus, which will mean the jobless rate will keep moving downward, put upward pressure on wages. This is the typical Phillips curve stuff, but it does seem plausible that the Fed will have to pivot a bit and accelerate its hikes just a little.
Yeah, I'm not a big fan of the Phillips curve. I mean, the Phillips curve in the long run is vertical, so there's not a trade-off. And so I don't worry a lot about those kinds of things. But also, we don't know what the potential GDP growth is. You say it's high, a little under 2. It could be 3.
But
we don't know.
But isn't the math based on growth potential is based on adding up the new numbers of people in the labor force plus how more productive they are?
Correct.
Historically, it was 1% more people and 2% more productive, so 3% growth potential.
Correct.
These days, it seems, based on the labor force statistics, 0.5% from labor, and productivity the last 5 years has grown only 0.5% per year because there's been a dearth of investment, the weakest since 1953 in terms of new investments.
But productivity is forward-looking. What if we get all kinds of deregulation that frees things up and you get more productivity out of a given labor force, given capital stock?
Sure.
So you build that Dakota pipeline, you get a little productivity.
And David, this has been one of your big points, that we don't know, that regulatory overhang is quite a bit more significant than a lot of people give it credit for. What do you think with this rollback that we've seen already under President Trump?
Well, there's my little hope. I'm not a big fan of President Trump, but my big hope is his 2-for-1 thing. Every new regulation, you get rid of 2 old ones. Of course, it matters which 2 old ones, but there are a lot of things, for example, the EPA is doing now that are hampering productivity. They are telling farmers, this little pond you have on your farm, you thought it was a pond? It's a waterway.
If you didn't know it was Donald Trump and you saw that cabinet and you saw his policies, you'd be in pig heaven.
Yeah, I did a blog post about this,
comparing
his picks to Ronald Reagan's.
Right.
Everyone was gung-ho on Ronald Reagan. I worked for Ronald Reagan. His picks, except for the Attorney General, are better.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.